Okay, good evening. Welcome to the weekly Take on the Market. Today is Thursday, July 17th. It's about 6 o'clock my time. I didn't think I'd have a chance to do the video tomorrow, so I didn't want to risk it. I'm going to do it tonight. You know, we'll see what happens tomorrow, but mostly so far so good as far as Fridays. I'll be your host. My name is Scott St. Clair. I'm the manager of the premium product group here at Investors Business Daily. Please take a moment to read the disclaimer. It's very important. This disclaimer allows us to speak freely on these videos, on IBD Live, on webinars that we do. No, I said it 100 times, but it's really one of the great perks of working at IBD is being able to use these products that we have and participate in the markets as if we were a customer or a client. So, all right. So we will do the market indices. We will look at some ETFs. We'll do stocks to watch, and then we'll do the quote, kind of the usual routine. Okay. All right. Let's start with sentiment. I think I've been using this for a while, but maybe we'll just keep going until something drastic changes. But I just find it amazing, incredibly curiously strange, to be honest, that with the market at just making all-time highs and every day seems to be a really good day in the market. I think yesterday there was a rumor about Trump firing Powell. The futures broke like, maybe 0.75% in an instance. And then it's back in 20 minutes. It's back to where it was. I just don't see how you can be bearish on something like that. It just cannot go down. If you want to be bearish, let it go down and stay down. That would be the first step in being bearish. But there are some speculative juices flowing in the crypto area and other areas. I can't remember the stock I saw today. I'm gonna have to pull it up maybe on my. I pulled it. Came across it on. If I go to my most recent symbols. Oh yeah, VLCN. So I'll pull that one up. But anyways, there are some pockets of speculation for sure. But and I guess maybe that's what people see and that bothers them. I don't know. I don't think that's the case. I just feel like it's just kind of human nature that maybe if you miss the rally, then you almost want it to go down. You have to be careful of that. I've gotten myself into situations like that before in my trading career. There's an adage, trade the market you have, not the one you want. So, just to allow, if you're open and flexible and open-minded to what the market's telling you, the market will just give you the money. Honestly, the market just gives you the money. You just have to be willing to accept it. I know that sounds so strange, but it's totally true. You have to be willing to allow the market to give you the money by going with it, by flowing with where the market's going. Be water, like Bruce Lee would say. So sentiment is barely bulls versus bears, barely higher. So very strange. I think that might be it for slides. So let's jump to the indexes and just kind of go through them. And let me turn off my video so you can. So yeah, you can see I guess that was it yesterday where it tried to go down and couldn't. Now we're, back at new highs, and sure, it could start going down tomorrow. Anything could happen, but you have to be careful with that. It could start going down. It could start going down. Oh, it's finally going down. And it could start going. It could start going down. It could start going down. When the market gets in trouble, you're going to just see a lot more of the pink or the magenta bars, right? See how? Just go back and look. See how you had a bad break. Market tried to rally. 4 or 5 down days in a row. Try to rally. 4 or 5 down days in a row. You get this distribution. tried to rally, reversal day, tried to rally, and you see how that's kind of what happens is tops are a bit of a process versus bottoms are a little bit more spectacular. So you get this capitulation bottom, market rallies up, you get a test, never undercuts, and then it's off to the races. So it just looks like the market's going higher. When that'll end, I haven't the slightest. Will it end? I think so, but I don't know. I can't say with 100% certainty it'll end. I've got a lot of conviction that it will end one day, but right now I'm just kind of just in buy mode. And honestly, I think I said on IB Live, I don't know if for me and it's just for me how much value add there is in looking at the indexes. Most of the day, I'm just kind of watching the stocks that I'm in, the stocks that I want to be in, the stocks that I wished I was in, and just kind of evaluating what's going on. Like I don't think if before pulling up this chart, I don't think I could have told you within 0.5% what the Nasdaq did today. I didn't have the slightest clue that whether it was up, down, or sideways. I think maybe I would have thought if you forced me to guess that it was up because my count was up today, but that doesn't, that's not always the case. But I just think a lot of people spend so much energy on these big behemoth indexes when under the surface there's just so much going on in the markets. Market's very, very dynamic right now, and honestly, I've missed some opportunities to make money in some speculative areas that I normally would probably participate at least a little bit. I might not make 100 cents on the dollar, but I might make 30 or 40 or 50 cents on the dollar in some of these moves, and I'm okay with that. So here's the S&P. I'm going to assume it was up to a new high today. And again, if you're negative or want to be negative, I would just say just draw a line right there and just wait for that. Wait for that to end. Now, if it goes to 8,000, then that would be too far away. But within 5, 6, 7% of this, it gives you a lot of room to protect yourself if you're worried about protecting yourself to the downside. It would break down through this high if something was wrong, right? What else? The Dow, I'm not gonna pull that up. I don't even know what that does. IWM, it's fine. It's not great. It's fine. This, as far as the indexes, it's the Nasdaq and the S&P. They're really the straw that stirs the drink. I haven't pulled up emerging markets in a while, but even emerging markets are starting to do pretty well. Still not near all-time highs like others, but it's gone from 39 to 49. What's 10 on 39? What's that? 28%, 26% roughly. So it's actually done okay. And I know like KWeb is, I guess that's kind of breaking out of this pivot. To me, it's the perpetual setup, right? Sets up, fails, sets up, works for half a minute, sets up, fails, and just maybe one day it works, but doesn't look terrible either. So from the index standpoint, if you're just forced to look at just the indexes, the market is just fine. Better than fine, to be honest. So gold, this little trend line drawn. Let me see here. So it's in a base, not doing a whole lot, losing relative strength. So I'm not that excited about. I don't own anything gold related. I don't own any miners. I do own platinum. Well, I guess we can get to that when we get to the ETFs. Maybe let's jump to the ETFs. So we have gold. To me, it looks like it's a laggard. Like the relative strength is undercutting this low down here. So to me, gold is an avoid unless it can start to get a little bit up in here. Then maybe I would change my mind. Silver, so a little bit better. Platinum, to me, platinum looks so much better than all of them right at this very moment, but took out this little high here. If you go to the weekly, it's coming out of a long base. What's that? About 7 weeks up in a row. Could Could it pause? Of course, but there. I just don't see any reason to do anything with it just here at this point. How about, of course, Bitcoin? We got to look at that. Looks just fine, if not better than fine. I don't know what Bitcoin is doing after hours, but I think the crypto bill got passed. So like XXRP is up a zillion after hours. It's up 10 divided by 56. It's up about 18%. It's now, this might be, yeah, it is a levered. So it looks like XXRP is up about 10%. Ethereum. So I because I always love the just it's not enough to be one times. I'm always interested in the two times if I'm going to trade them. This one is up about 8.5%, 8% ish after hours. It's at 109 bid. So that puts Ethereum up, what, another 5% or so. So I would guess that Bitcoin is up. So now, this is like speculative and gangbusters. And now this is a levered, so keep that in mind. But it's almost a triple from the low. The low is 25. It's currently 67 in the after hours. So almost a triple. How about the Ethereum, just the regular one, 12 to what, 28? So 2.5 fold or something. IBIT, not as much, 43 to 67. What's that, about 50% for Bitcoin? So the crypto area has been going gangbusters. My gut instinct as a financial historian is this will end in tears, but I don't know. I think that it's costing me money in the sense of opportunity cost, right? So I have not participated in this much, if at all. But it's not I'm not betting against it, not yet anyways. I might one day with like MicroStrategy or something if it were to actually start to really show some signs. But I am aware of the opportunity cost of missing this because in the old days I would just trade the chart. I'm trying not to just trade the chart anymore. So like this, I would have bought that. It's just like I'm going to trade the chart. But honestly, I probably would have sold this gap up here. But like I said, I would have captured maybe 30 cents on the dollar instead of 80 cents. But that's fine. At least you get that money into your account, the 30 cents. So it'll be when they write the history books on this, it's going to be very, very interesting, I think. There's a book called Bull, I think it's called Bull, just Bull. Maggie Mahar, Mahar. I'm looking at the book. And it's not the only book. There's a number of books about like the 2000 bull market era. And it's always fun to go back and read those and reminisce on things back then. And in the teeth of the bull market in the 90s, I kind of knew that it would end, but you just don't know how or when or why it's going to end. And so you just go with it until it ends. That's what stop losses are for. Once maybe trailing stops or staggering your stop and following the stock all the way up. What else is in the ETF area that I watch that I find interesting? Granny, I think, is a new one. GRNY, acting pretty good. Not gonna set the world on fire, but it's up 9% from the pivot, and it's up 8 divided by 15, so 53% from the lows. So it's been a better performer than the market. ARK is kind of refound themselves. ARKK, wow, up 30% from the pivot and almost a double from the lows. So they've really kind of turned it around. They must be exposed to a lot better merchandise, or the merchandise that they were exposed to is found a bid at this point. That's maybe a little bit of both, but that's kind of probably what's going on. So there's a lot of options, a lot of areas in those. If you don't want to, kind of trade those stuff, you have the stocks. So you've got like coin. To me, this is the obvious breakout day right there. So 277, and I use that term loosely. Obvious. I'm buying that day. 277 to 410. So this one's up about 50%. Hood has been the leader. I think this is the double bottom. So 50 to over 100 more it's doubled off there. It's done very well. You got Circle, the new IPO. So it runs, corrects pretty good. And then yesterday had a very good day. I do own a little bit of Circle. I bought it yesterday and then sold a little bit today. It's very volatile. Like I think it opened down like 10 and finished up 1 and change, or maybe it even was down more than 10. Let's see here. It closed at 233 and yeah, so it was down like 13. So it was on the open. It just like, it loses its bid. It just melts and then it spends the rest of the day coming back. So you have to kind of be positioned accordingly to be able to withstand that. That's the kind of hard part about having stops. If you put your stops too tight, you're oh, I don't want to give back my profit. Well, you're just going to get stopped. You might as well just sell it. Why let it take the 15, 20, 30 points? Why let it go down and get you and take half your profit? I do that a lot. What else in the stock area? So a bit not as speculative and as crazy as the crypto area, but like rare earths, metals, maybe that's where the platinum is kind of coming from. The PPLT is I believe the US government made, I don't want to say like a cash infusion, but there was an announcement that really jammed this stock. And this is a very interesting stock, very boom bust. If you drive to Vegas from where I live, you drive right past their plant, so to speak. It's their plant is basically the hills, where they're digging up all these rare earths, but very, very powerful. You see how I drew this when it gapped up, I drew this trend line. I was really hoping it would come underneath there and then do that, and I would have bought it, and it didn't. So I'm not in this one. But then you have like the uranium ones, like this is energy fuels, which I'm in. Speculative but small, and you can see there's money to be made. I mean, this is a big move, 6 and change to 9. It's a really big move in a short period of time. UEC, I don't own this one, but they're all going to kind of trade the same. CCJ is more bigger, more probably more institutional quality, but it doesn't move as much. So I that's why I was gravitated to like the UUUU one. What else is in that kind of metals area? UAMY, another very speculative name. They have antimony, which is like another rare earth that's the world can't live without, so to speak, coming out of this double bottom. And so there's some speculative fervor going on that you want to keep an eye on, and when that ends, then you probably want to start maybe battening down the hatches. But right now, it seems like all systems are go still. The quantum stocks, looks technically. I'm kind of soured on them because of the work that I did. I heard somebody talk about it, and it soured me on the names. But technically, boy, that sure looks good. RGTI broke out of a nice cup with handles. Yes, if you just buy it and you're up, 20% in 2 days. Sometimes you have to put a lot more weight on just let the market tell you what to buy. Is acting. Oh, LEU is one that I own. I don't know if I mentioned on the video, but I talked about it on Monday on IBD Live. To me, this was a kind of a high tide flag. Here, there, that was the pivot. I do own this one, and acting great, just powering ahead. So there's that whole area, and then there was that VLCN, which I don't really know much about. Oh, you can't even, oh my gosh, you can't even see it on the chart. So on the mobile device, it looked a little differently, but let me go to the intraday chart. So I think it's like the company is Electric Off-Road Sports. So look at the intraday chart. I don't know what the news was, but when you get this kind of like the stock's 9 and then it's 40, that's like 1999 type stuff. Now, is it January 1999 or December 1999? I haven't the slightest, but this one, there's SBET, which it's hard to see. It made this huge move, then it gives it all back, and then look, it's 10 to almost 40 in just a handful of days. This is a 60-minute chart. This is not that many days. And then there's what, BMNR, is that the one? Bitmine Immersion. So it seems to be up or down 10 points each day, and you can't even hardly see it on the chart. So there was that time period. What was it? The SPACs, where a lot of these look like the SPACs did. So like Oklo, you go to the monthly. Didn't do it like some of the others, but you see how it looked like it was going to get going. Went from 7 to 17 in 1 month, and then just crumbled, gave it all back. So that was kind of what you're that'll be your sign that maybe something's wrong and you need to protect yourself and move on. When you start to see, as strange as it sounds, if you own the Nvidias and the Palantirs of the world, you'd be like, well, what do I need to worry about what Oklo's doing and what some of these other quantum stocks are doing? And you're sort of mostly right, but you also want to know that when the speculative juices are running, and when they run out and those people start getting hurt, the big money might start looking around and saying, "Uh-oh, maybe the music has stopped. It's time to find a chair, so to speak." And so they might start selling some of these bigger names. So like Nvidia is acting great. I messed that one up. I had a really oversized position here because I was like, it's Nvidia. You can have an oversized position and just leave it. I remember talking about it in comparison to Cisco, and it's plan your trade your plan. I planned the trade. I didn't trade the plan. It just couldn't help myself and took profits too soon. What else is? I think I did Hood. We haven't looked Palantir. Let's look at Palantir. Oh, this is the ETF. So Palantir is just powering ahead, total leadership. So Hood, Palantir, those are the two big liquid best names, with the Nvidia for sure. I did look at Oklo, holding up really well. It's just hard to, again, this could end tomorrow, but I just have a hard time being bearish when a stock like Oklo is just sticking straight up in the air, literally like 3 days from its all-time high. It's like the second greatest close in the stock's history. This is the best close. This is the second best closing price in the stock's history. I just don't. There's just nothing bearish about that. You're just guessing. And I'm preaching to the choir. I'm talking to myself a little bit. What other stocks? But you have to have some, like, so here's Duolingo. This is a good example of why I think having the indexes is not the best strategy, like relying so much on the indexes. So if you loved Duolingo and you bought the earnings gap, And it's let's just say you paid the pivot. At one point you're up at least 23%, and then went sideways, and then you're up 10, 12, 15%. Now you're basically unchanged. And now you're down 18%. So in that whole time period, what the indexes do? They basically went straight up. Well, what did that have to do with your Duolingo trade? Nothing. Absolutely nothing. You totally mishandled the Duolingo trade if you're looking at the Nasdaq, right? So you just handle it how you handle it. Don't worry about what the indexes are doing. At one point, Duolingo looked like new leadership, and then it lost its luster, and you need to be out. So it's a good example of why you just treat each individual trade and not worry so much about the indexes. Carvana, if you bought that, you're up 18%, it's hanging in there. But if it starts to do this, you might have to be out. A-Lab, this is stock that I just can't, every time you buy it, it blows up, you buy, it blows up, you buy, it blows up, you buy, it blows up, and so I don't care what the Nasdaq's done. This is a tough stock to trade. I think I got 2 or 3 losses in this one trying to trade this one, that type of action. So just let the stocks do their thing and tell you. So like here's Credo. If you bought this, like right in here, I think would have been the pivot. This is the first real sign. Like the market was up today and the stock gave back some of the gains and volume is up ever so slightly. Like if I had 1,000 shares of that, I think, selling 200, 300, 400 shares, something like that would be prudent just because of the signal you're getting. It's the first signal, but there's a signal that maybe the stock is tired and could possibly need to be sold. So just keep looking for ideas and I think maybe if the market goes bad, like Nicholas Darvis' book, where he's talking about he found himself with, no stocks in a bear market. It's not because he knew the bear market was coming, because all of his stocks triggered their losses or their lock-in profit rules that he had, and there were no new setups. So he just kept getting in. There's a famous saying. He says, he goes, I just found myself in cash as the bear market unfolded. He didn't know the bear market was coming. He just found himself there. So, and I bring up Darvis because I'm working on the webinar for next Saturday and, building a position. And I like the way Darvis builds positions. Not that the O'Neill way is wrong. It's just, I prefer to get a little bit of shares of XYZ. And then if it works, really go in there and start to add. And that's, if you read the book, you'll see sometimes you'll have 500 shares of Texas Instruments, and then the next buy is 1,500 shares, 4 points higher. So he really kind of does it slightly different. I think that's it as far as stocks. I didn't look at some of the big boys, but you guys can look at all of those on your own, Tesla, etc. So let's go to the quote of the week. And because I'm working on this webinar and I've been thinking a lot about position sizing and what the right strategy is. And unfortunately, there isn't a perfect strategy. There's a lot of ways to slice it, and everybody's different. I think they're all good. They all have pluses and minuses. But the standard idea is you just never know which is going to be your biggest winner. So therefore, you put the same amount into every stock and then let the stock pull you in with more size if it starts to lead. And this guy, Christian Koulamagi, I apologize if I messed up his name. I see him all over Twitter. People talk about him all the time as this great trader. So I went down the rabbit hole watching a lot of his videos on this Koulamagi University on YouTube. And I like the way he thinks, which is 90% of it anyways, his thought process of things. But he says you should risk more on higher conviction trades. And that makes total sense, right? If you think NVIDIA has a really big chance, should have more money in that one than say, which I don't know it that much about. So, but I'm just speculating in it. So then I should have a less of a position in something like that. That makes total sense to me. A lot of times I don't want, because I tend to use like a standard, just put 10% in to start. Sometimes I don't want, I'm like, gosh, do I want to buy energy fuels with 10% of my hard-earned money? Because remember, I'm going to put it the same thing across 10% about all of my accounts. And I hesitate sometimes, like the crypto trade. I just would never just put 10% of my money in XXRP. But why couldn't I have put like 2% in there? Because I don't have that much conviction. And then maybe I could take it to 10 if it really starts to work. But this makes a lot more sense to me in that the more conviction you have in the trade, the more money you should have in it. When Circle started to go the very first time, I didn't do this consciously. Maybe it was just subconsciously. I was like, this is going to work. I want more money in there. So I really ramped up the conviction size, the position size, but to offset the risk I felt I was taking, I was mostly in cash, and outside of that, I had very few other positions besides a really strong concentrated position in Circle. I don't think you should risk the same dollar amount in every trade, because not every trade is created equal. There are once a week opportunities, once a month opportunities, once a year opportunities. Then he says, well, wait a second. If you're asking this question, maybe you're new. And if you're new, then yes, just go 10% across the board or 5% across the board or whatever the number is that you're going to do. But once you get more experience, that's when you should start betting more on trades that you have higher conviction in. I like this idea. I think I'm going to implement this a little bit more than I have been recently. So rather than sometimes like a crypto is a great example. I've just passed on some of these trades, or the quantum stocks. I've just like passed. I don't have a lot of conviction in them, so I just do zero. Well, the charts are telling me they should be bought. So why not just do 2 or 3 or 4% positions? And if I lose on that, it's not going to hurt me, especially if you've built some cushion for the year. So and then, if I like Circle or LEU or NVIDIA, I'm going to ramp up the size. And look, you could also build in the factors of liquidity, institutional sponsorship, but those are things that will help with the conviction that you have on the trade, right? If it's NVIDIA or something with more a hood with institutional sponsorship, whether it's mutual funds or there's a really good hedge fund that I follow that has been accumulating hood in the most recent couple of quarters. That jams up the conviction on the trade. So, all right, next Friday, I don't know if there'll be another video or not. I guess it's just a lot depend on how far along I am on the Saturday video. I'm sorry, the Saturday webinar, if I feel I'm comfortable and ready to go. Otherwise, I might just pass on the Friday to prepare for Saturday, and or if something drastic happens in the market. If the market really changes one way or the other, then maybe I'll still do the Friday video. I think that's it. I think that's it for today. 800-831-2525, Market Surge at investors.com. Have a great weekend, everybody. We'll see you either next week or the following week. Bye-bye.